Investors are focused like a laser beam on Ben Bernanke's speech in Jackson Hole on Friday. So is there hope? Perhaps false hope, but is there some kind of hope that the Fed is finally listening to the people out there, telling them to stop debasing the dollar by printing more cash? And does this mean maybe it's time to sell your gold? We welcome Euro-Pacific Precious Metals CEO Peter Schiff, who is always buying gold, and the author of How an Economy Grows and Why It Crashes. Also, another author who talks a lot about gold, Matson. He's the CEO of Matson Money. He says gold is great for jewelry, but bad for investors. Gentlemen, thank you very much for coming. We got a great all-star cast.
Great to be here.
Mark, first to you. Let me go to you first. You're in Cincinnati. Is it conceivable that the Fed is finally listening to the people out there saying don't print any more money?
Well, let's hope so. We don't need any more loose money floating around. But look, gold's never been a good long-term investment. It's only for speculators, not for good long-term investing. The average rate of return of gold is about 4% compared to Treasury bills at 5%, and the standard deviation of gold is 19. That means it has the same standard deviation of stocks, and stocks have historically made 10%. So it's only for speculators, not good for long-term investors.
I think Peter begs to differ. Go ahead, Peter.
I've been buying gold for over 10 years. It's been good for me. I guess it all depends on your time horizon. I mean, people who bought stocks 10 years ago have lost money. And I think people who are buying bonds are going to lose even more.
But is now the time to get in, just as gold is dropping by 100 points in one day?
You got to remember, we were at 1,900 yesterday. I mean, we came a long way. I think the sell-off.
So we were overbought in gold.
Yeah, I think it was technically inspired. Look, I think it would be great if Ben Bernanke heeded the message of gold. The rising gold price is telling us that money is too cheap. Interest rates are too low. But what is the Fed going to do?
Hold on a second. Is today's drop telling us that Ben Bernanke is not going to be printing any more money?
No, he's going to keep printing money. That's why gold is still, you know, what, 1,800 or 17, wherever it is right now. He is going to keep printing money. That's all he knows.
Mark, just on the short term, I agree with you that he's been doing a lot of that, and that seems to be all he knows. But in the short run, is the market telling us, Mark, today that Ben Bernanke on Friday is not going to give us an indication that he'll be printing more money?
I don't want to predict what Bernanke is going to do any more than I want to predict what the market's going to do over the next 6 months, because the reality is nobody can tell you what the market's going to do. And if you built a great diversified portfolio, Peter, over the last 10 years, you should have at least doubled your money there too. So, you know, the thing you don't want to do is speculate on bubbles. I don't get paid to chase bubbles or panic when the market crashes. And right now, gold has been run up. Every investor knows you don't buy when it's high, you buy when it's low.
Hold on, Peter. Mark, has the bubble burst? Is that what's going on right now? I understand you think that, Peter, but do you think the bubble has finally burst, Mark?
No one can predict the exact time that the bubble bursts for gold, like they can't predict the exact time when the bubble bursts for tech stocks. But there's no historic premium. You need at least 64 years in an asset category to know where there's a premium there. And historically, there is no premium for owning gold.
We can't wait 64 years. Just tell us, when are we going to know whether the bubble has burst or not? You think it's a bubble. When is it going to burst? What indicators do we look for to tell us that it has burst, Mark?
A bubble is any asset category that does not have any long-term reason to to have long-term premiums. The long-term premiums you're looking for are small-cap stocks, value stocks, globally diversified.
But Peter, you would say the reason to believe that gold is going to continue to go up because there's no reason to believe that Ben Bernanke is going to stop printing money, right?
Well, first of all, you know, people have been telling me gold was in a bubble since it was at 500 when I was buying it back then. But you don't compare gold to stocks. Gold is money. Compare it to the dollar. Compare it to the euro. Compare it to the yen. And so if you're going to compare it to other currencies, what is more likely to maintain its purchasing power over time? Something that's scarce, like gold, that has intrinsic value and can't be printed, or something with no intrinsic value that's being run off a printing press like it's going out of style?
Do you deny that gold has become currency? Because remember, Ron Paul asked Ben Bernanke that question specifically. Ben Bernanke said no. Ron Paul said yes. What do you think?
Think about this. Think about this. The people that say that gold's going forever and the dollars are getting debased are the ones that are willing to trade you dollars for their gold.
Who?
That's insane. No, if they really believed it, they wouldn't be trading dollars for gold. Oh, look at Goldline and all the people out there selling gold. That's exactly what they're doing.
I mean, People are accumulating gold. They use it to buy the things that they need. But if you understand money and gold, you save your gold and you spend your paper. That's what I'm doing. That's what my clients are doing at Euro Pacific Precious Metals. We are holding gold and we are spending paper. Now, obviously, you have to spend some gold. You got to eat, you got to live, you got to drive your car. But if you want to put money aside to spend it tomorrow, to spend it next year, to spend it in 5 years, what are you going to save? Are you going to save U.S. currency? No, you can't. You got to save something of intrinsic value. And gold isn't becoming money. It's always been money. The founding fathers made it money.
Understood. Are you hedging your bet, Mark, on gold at all? Do you have any percent of your portfolio in gold?
If you build a globally diversified portfolio, you already have gold. You have mining companies, you have distribution companies, you have all kinds of gold. There's no reason to double down and bet and leverage yourself up on it. No. And gold hasn't been a great store of money. After inflation and taxes, gold has been a terrible investment.
No, that's not true.
Term.
What are you talking about?
It is true.
Gold has been an excellent store of value.
Hold on,
4%
Peter,
after inflation of 3 and taxes
Hold
of
on.
28.
Again, it depends on your time frame, guys. You could pick a piece of any time frame in the past 100 years to prove either one of your points.
Look at the price of the Dow. Last week, the Dow Jones was worth less than 6 ounces of gold. 10 years ago, it was worth 43 ounces of gold. This is a huge bear market in stocks versus gold. In 1970, gold was $35 an ounce. It is $1,800 an ounce. You're telling me that that hasn't kept pace with inflation, that people haven't preserved their value? In fact, look at the price of oil. Oil is cheaper today than it was 30 or 40 years ago if you're paying for it in gold. It's more expensive if you're paying for it in dollars, but not if you got real money.
Okay, guys.